Hi, everyone. As promised, I'm going to do a quick overview of common size financial statements. And again, this is not anything that you won't get from your reading. If you do the reading, both the textbook reading and primarily the textbook reading, you'll get an overview on how these are done and what they're useful for. I just wanted to go through an illustrative example and hit on some high points. In the example I'm using right here, these are common size financial statements for two Milwaukee-based companies, Bucyrus and Joy Global. And these are both, interestingly enough, international mining companies that are both headquartered here in Milwaukee, or at least they were until they were recently subject to mergers and acquisitions, but that's a subject of another lecture entirely. But let's look at these common size financial statements. And let's first look at the mechanics of them so you know how to actually do the calculations. And then secondly, we'll go into kind of how you break it down for analysis. So to begin, the income statement takes each line in the income statement and calculates the dollar value as a percentage of the total dollar in sales. So basically, what this is telling us is that cost of goods sold is 69.6% of total sales. Gross profit is 30.4% of total sales. And you do this right on down the line. How is this useful? If you were to look at just 2009, you'd know the gross profit for every dollar of sales, we earn 30 cents of gross profit, which gives us 30 cents to clear our selling, general, and administrative costs, pay interest, pay taxes, and things like that. So if you were to just evaluate the company based on this number, you'd have to say, is that sufficient to cover their cost structure, the remaining cost structure? Basically, are they selling these pieces of mining equipment profitably? If you just, as with any analysis, if you just look at 1 year, one number, it doesn't tell you that much. So let's look at the trend. They're at 30.4% this year. They were 27.2% the previous year and 25.3% the preceding year. So it's trending in a good direction. I'd say that's a favorable trend, and as an investor, I like that. So basically, if you peel the onion and dive a little bit deeper, if you just take this number, you've got the basis of a very thin analysis. If you incorporate the trend, you have a more in-depth analysis. If you were to go one step further and dig a little bit deeper, you can actually compare to a competitor. Now, that is not required of the next assignment, but for those of you who are feeling ambitious enough, the opportunity is certainly available to do that. When you look at Joy Global versus Bucyrus, they're trending at about 32% gross profit margin, and that looks to me to be a little bit more favorable compared to Bucyrus. So here's a classic example of how, when we say diving deep or drilling down, if you just took this number, you'd be happy. If you took this trend, you'd be certainly happy. When you take that trend and compare it to a competitor, all of a sudden you have a much more in-depth understanding of how Bucyrus's performance is. There's a host of other applications to this sort of analysis. There's a handout on Moodle, financial analysis teaching note, that hits on a whole bunch of other comparative questions. But another interesting one is if you have a couple of different sales lines. So let's say Kohl's, I don't know if their financial statements just says sales, or maybe they break it out between retail sales and online sales. You can kind of see how a business is trending. You might see that their retail sales are going down, but their online sales are going up. That's another example of how they're used. We'll go through a few more examples in a moment. But before we do that, let's go to the balance sheet. So in this example, we have Bucyrus and Joy Global again. Notice that every single line on the asset side is calculated as a percentage of assets. Do the same thing on the liability and shareholders' equity side. A common mistake that people make is they calculate each line in current liabilities as a percentage of total liabilities. Don't do that. Calculate each line as a percentage of total assets. So now that you know how to do it mechanically, let's talk about what sort of wisdom we can garner from this type of analysis. So let's just say at a very high level, you're curious about the composition of each company's balance sheet. So what basically by setting all assets at 100%, you're taking two similar but different size companies. One of these may be smaller, one may be larger, and we're basically putting them on the same playing field, so to speak. So right now, what we can tell is total assets are total sum, and I'm kind of curious about like these companies from a liquidity standpoint. How liquid are they? So I'm going to go to total current assets, and basically what this tells me is total current assets is about 57.5% of total assets. So basically, for every dollar of assets, about 57 cents is a current asset. And again, a current asset is an asset that is realizable in cash within a 1 year time frame. So fairly liquid. And then if you compare to the trend, you really like where that trend is going, at least on the surface. So we're going to dive a little bit deeper, and we're going to say, okay, what is driving this trend? So when you look at each of these metrics, what's really driving the trend is accounts receivable. It went from 20 to 25 to 27.4. Now, is that a good thing or not? Is that because they generated a lot of sales at the end of the period? What I'd be curious to know is, how do their inventory turnover look? If you look at their days receivables, those activity measures, those ratios, I wonder if this, what appears to be a favorable trend, is in fact a product of them not collecting receivables. All right, so let's peel the onion a little bit more and drill a little bit deeper and see how these current assets as a percentage of total assets compares to a competitor. And you'll notice that Joy Global has much more in current assets than Bucyrus. So if you look at their number in 2009, 64.8% of the company's total assets were total current assets. So these are the resources the company owns that are realizable in cash within a year time frame. So basically, for every dollar in assets, they had 64 cents, or close to 65 cents, that were realizable within a year. So that's really good, and certainly better compared to Bucyrus from a liquidity standpoint. And then you figure, like, how do their receivables compare to Bucyrus? This is a pretty remarkable difference. Joy Global has about 20% of their assets tied up in receivables. Bucyrus has 27.4%. So basically, from this, I would conclude that Bucyrus has some work to do on their collections, or I would have to vet that out. I'd have to look at the activity ratios related to receivables. But this is a real quick and easy example of the type of analysis you can do using common-size financial statements. So again, it's a matter of the mechanics first, calculating it right. Then you drill down. So you figure out, you can drill down using some of the questions in the handout on Moodle. You have to do some interpretation. You also have to get to the business story. So if there's something behind this receivables trend, maybe it's discussed in the MD&A section of the annual report. Again, MD&A is management discussion and analysis. So what is the business reason? And then always conclude, when you write your paragraph, always conclude with the relevance to your audience, in this case, investors. So anyway, I think that goes through how these are calculated, how they're interpreted. I'm going to just really quickly revisit this document, which was put out on Moodle after our second class. But right here, there's a little concise description of how common-size financial statements are used. And there's a series of questions that you should consider as you probe deeper into your common-size financial statements. And let me give you a hint. These are pretty much the questions I ask when I review your analysis. So I'm going to check to make sure the common-size financial statements that you calculate are accurately done. And then once they're if they are in fact accurately done, I'm going to look at your write-up. Again, there's a writing assignment associated with the common-size financial statements. And I'm going to see, is there one of these questions, were they asked, should they have been asked? How deep did you dive into your common size financial statements? So refer back to this. I would encourage you to have a printout of this document and have these 8 questions handy as you evaluate your common size financial statements. And if you haven't done so already, there's also a series of questions related to trend analysis, and you can do the trend analysis on common size financial statements or financial statements done in dollars. And there's also questions related to ratio analysis. So I'm getting feedback on the ratio analysis, and I'm going to encourage a lot of you to refer to this document to get a little bit more depth in your commentary. So anyway, this is a very useful document. It'll help you get to the business reason. It'll help you get to the story. It'll help you get to the why and give some depth to your analysis.